Smart 24, driving business.
Welcome back, ladies and gentlemen, and thank you so much for tuning into Smart 24 TV once again. This is a morning financial market show where we give you updates on what is currently happening in the regional and global stocks, as well as the latest news coming in. We've just had an analysis on the Uganda Securities Exchange, and Victor, one of the things that really has stood out for me has been the fact that MTN Uganda has really had that big fall from the 180 shilling mark, but all is not at loss. At the end of the day, we still have lots of other stocks that are performing quite well, and investors are indeed excited in some of these other stocks. Victor.
The telecommunication world has indeed proven to be really diverse, and as much as light is really shining on MTN and Airtel at the moment, there is still other telecommunications companies coming up in Uganda and fighting to take that top mark. But just for context on the indices, and of course we know these also played a major role in determining the performance of the telecommunication and banking services. But the all-share index dropped by 0.5%, which is noteworthy because investors need to know, and they need to know what contributed to the movement and how it fits with the broader market trends. But of course we are looking at a one-week gain of 1.91%, and this indicates some market fluctuations that we should investigate further. And we're looking at a four-week loss of 1.28%, and in another aspect that needs scrutiny. But as well, we're looking at a substantial year-to-date loss of 22.84%. So the year-to-date performance is essential for investors as it gives a broader picture of the market's trajectory. And in addition to the all-share index, we should examine the local companies index as well, which, as Anthony said, it declined by 2.73%. But we're also looking at a year-to-date gain of 3.18% for this index as well. And of course, this is implying a promising performance within local companies in Uganda. So the interplay of these indices helps investors to form a more comprehensive view of the market. And considering economic and political factors, you can indeed try to determine how these movements are going to play out. But we should also explore global events. We're looking at local policy changes and economic landscape, and the way they are all playing part in shaping Uganda's financial markets. But we recently have been getting updates on Airtel and the extension of the IPO, which is a rather rare thing to happen within the world of finance. But Anthony, could you give us some deeper insights on that particular situation?
Yes, Victor. So Airtel Uganda has extended the IPO from 13th of October to 27th of October. That is an extra 14 days. This IPO started on the 31st of August and was meant to close on the 13th of October. However, just a few hours after 13th of October, Airtel management pulled out and said they are going to be extending that IPO. Well, we had an interview with Mr. David Birungi recently, and one of the reasons he gave was that towards the end of the IPO, there was an over, subscription. There's been a lot of many people, investors who were feeling locked out, and they still wanted more time to be able to invest. And there was an influx of especially retail investors in the last few hours of the IPO, thus opting to extend the debt to 27th of October, which is, by the way, this Friday in this particular week. They also sought the approval of the Capital Markets Authority on the matter, which they did receive. And CMA declined, however, to comment on the matters when they were approached by the journalists. Airtel, first of all, Victor, was meant to list last year by December, and they came up with a complaint that the market conditions were not favorable for them to list. The period was extended to this year, and finally on the 31st of August they were able to file in their initial public offer. However, this extension, according to analysts, there remains a lot of questions more than answers, so to say, due to the market dynamics. First of all, this is not something that is common. I don't remember any IPO that was extended, at least for the last 10 years that we've been monitoring the stock market. We haven't seen this very common. And some sources say the market conditions might still have been unfavorable for the company to list, or there could still be an undersubscription underlying this IPO. But whatever the case is, Airtel is listing first and foremost as a requirement by the national broadband policy to list 20% stake of all telecommunications companies in the country. That is exactly what MTN followed, and Airtel is following suit. The US currently has 9 local listings, and that is MTN inclusive. Airtel will be the 10th stock to list domestically, and that will increase the number of listings to number of local listings to 10. US listing rules also require that immediately after the offer, that is the initial public offer, at least 20% of the shares to be held and not less than 500 shareholders, excluding any employees and directors of the company.
Well, thank you so much, Anthony. But in other highlights from the Uganda Securities Exchange, we are looking at its latest statement as the 4th most busy or most activated financial market on the continent. But as we all know, Africa is home to one of the most diverse and expansive financial markets on the globe. So the continent boasts varying fiscal and economic realities, and as such offers financial securities that differ based on sub-regions. But with regard to Africa's status as a developing economy, the continent is often touted as a destination for capital investment. So this, in addition to its rapid tech adoption, a vast array of minerals, and a young demographic, it ensures that almost every and any industry you can imagine can thrive in the continent. But looking at the list, we're looking at Uganda coming up as the 4th in a list of the top 10 African countries with the most booming financial markets, which is rather really impressive, because as the market stands, most of the citizens might not understand how busy this market is, and it is mostly due to ignorance, I might say, and a little lack of enough financial literacy. But the market is indeed busy, and it is actually having some activity noticed all over the world. And as per 2023, we are looking at an index of 63, and 22, we are looking at an index of 64. So, Anthony, what do you think about this particular highlight?
ABSA, or the Amalgamated Banks of South Africa, used an index or metrics certain metrics to determine the booming financial markets in Africa. One of the metrics was transparency, and I have to say this is where surprisingly Uganda ranked fourth. The Capital Markets Authority in Uganda has put in a lot of effort to make sure that there's transparency on the market, but also market accessibility. Before 2015, Victor, the only way people would access the market was through a stockbroker, and they had to go to the office physically, fill a lot of paperwork. But today all that is gone. The SCD system, or the Security Central Depository System, has been decentralized to a measure that now you can use your phone to open an account. You can use your phone. Airtel has done it, MTN has done it, and that is how the industry has been able to actually get to access more retail investors. And that is one of the metrics that the Amalgamated Banks of South Africa put in place: the transparency, market accessibility, and of course market profitability. However, on the market profitability part, I think there's a lot lacking for Uganda's case, and this is where countries like South Africa, Mauritius, and Nigeria actually get to beat us. They do have very huge stocks, and they do have a lot of options. In terms of products diversification, they also do beat us by far. Uganda will still have a limitation of two products. That is the fixed incomes and the stocks. Well, when you go to South Africa, when you go to Nigeria, when you go to Mauritius, they have derivative products, they have ETFs, they have NFTs on stocks, they have ETFs on bonds, ETFs on stocks, and they're actually listed. This gives investors more options, and more options, more investors, because you have different kinds of investors actually catered for. But I do appreciate the list, and the scores of each of these companies, of each of these rather countries, has been well appreciated. My only prayer is that Uganda could also rank fast, and this can be possible only through, first of all, an increase in the local retail investors base, and also an increase in awareness by the different institutions that are involved in the financial markets business in Uganda.
Well, however, Anthony, how a country's financial market is performing is also largely dependent on some factors, including measures of market accessibility, like you've said. We're looking at openness, and among so many others, to mention but a few. But we're looking at a study that was particularly focused on ABSA Africa financial markets, and with assistance from the United Nations Economic Commission, 28 nations are now included in this year's report for Africa, including Cabo Verde and Tunisia. So to measure the performance of Africa's financial market, ABSA took a consideration of 6 economic pillars, including market depth, access to foreign exchange markets, and we're looking at market transparency, tax and regulatory environment, the capacity of local investors, macroeconomic environment, and the transparency and legal standards and enforceability. So scores for each pillar are determined by the relative performance of each country for each indicator, which is then rebased to create a uniform scale. So overall results are calculated as an average of the scores from each pillar.
Well, one of the things that's drawing us back as well, Victor, has been, for example, a report by Bank of Uganda indicating a record high increase in the number of cases requiring compensation. That has put our banking experience and banking systems on the spot. Banks and other supervised financial institutions have recorded a large increase in the compensations related to customer complaints in the period ended June, signaling an increase in the fraud-related cases. This probably explains some of the things that our financial markets are actually facing as challenges. In details contained, Victor, in the Bank of Uganda 2022-2023 report, customer complaints that required compensation more than doubled and increased by at least 1,022. The report does not give the value of the compensation, but indicates that at least over 2,436 complaints have been resulting into financial compensations to customers, many of whom had filed complaints, especially related to agent banking, loans, debit and credit cards, automated teller machines, and mobile money, among others.
Well, the number is more than double. So we're looking at around 1,324 complaints for which customers were compensated in the same period in the 2021-2022 financial year. But 184 complaints remained in progress, while 2,346 complaints involved financial compensation to customers. So the report reads in part noting that there has been a sustained high written in the number of fraud-related complaints, which come at a time when financial institutions are pushing for the adoption of digital banking. So when you look at a situation like this, it goes to slow down the adaptation of digital banking, because if someone is noticing this level of fraudulency in the system, it creates a level of insecurity to which customers are going to become less reliable onto digital banking, and yet it is actually the most convenient form of banking as we speak. But during the period, the report notes commercial banks and other supervised financial institutions receiving a total of 433,258 complaints, which was a large reduction from the 917,938 complaints filed in the same period ended June of 2022. So the report, which analyzes financial markets, Bank of Uganda performance and the economy at large, indicates that the mobile money and mobile banking category recorded the highest number of complaints, which comprised of 40.1% of the recorded cases.
Complaints related to loan processing also followed suit at least 4.8%, while agent banking and debit cards contributed 9.8 and 6.9% respectively. But while agent banking has gained fame and popularity over the past couple of years, it has also come with its own challenges, and a lot of people leverage the fact that there's really quick access to the banks to actually do fraudulent activities. There was a tremendous increase also in mobile money, stock mobile banking complaints, as compared to 29.3% for the period ending June 2022, partly explained by the rapid uptake in mobile money services amid increase in fraud and network disruptions, the report read in part. The report also indicates that there has been an increase in loan processing complaints, which rose from at least 6.3% to 4.8%, noting that this could have resulted from the fact that many businesses and individuals are yet to recover from the impact of COVID-19, which has been seeing many supervised financial institution customers grapple with the foreclosure on their collateral. During COVID-19, there was a lot of requirement for recapitalization of different businesses. Entrepreneurs were running to the banks to actually finance their activities and restart their businesses, but this came at the expense of collateral, which sometimes has been involving their business premises, it has been involving land and their homes, which have been taken.
So obviously this is putting the banking environment in a tight spot, because it is obvious by now that all eyes in the country are on them, and the public is asking themselves who to trust and where to run to. But this kind of situation within that particular environment is also helping us to determine the particular performance of these banks on the stock exchange, and it also goes to show that Stanbic Holdings, or particularly Stanbic Bank, is being indeed resilient with this situation, because it has so far hit KCB, it has hit ABSA, it has hit Baroda, and hopefully we're yet to see how the week will play out for these banking this banking sector.
Yeah, wow. We'll take another quick breather before we move into the Nairobi markets. And this is Financial Markets, ladies and gentlemen. My name is Anthony, together with Victor. We take another short break. Stay with us.
Smart 24, driving business.
My name is Kaheru Bright Bernard, a sales and marketing consultant with Bukona Agro Processors. Bukona Agro Processors is a local manufacturer of green energy, specifically ethanol, for clean cooking. The factory was established in 2013. Factory work started by 2019, and by 2020 we got support from government through Uganda Development Corporation to further improve our production, manufacture stoves that would be used, that would use ethanol for clean cooking. So with that fuel, we're producing fuel, green fuel, with the bio stoves for clean cooking. And we are in a partnership with Uganda'S that has about 9,000 local farmers producing cassava, which is a bio, which is a raw material for production of ethanol. And we also use maize and grain, specifically sorghum, for production of the fuel. And currently, we are exporting to Kenya. We have a partnership with Vivo Energy that supplies Cocoa Networks, a distributor of clean cooking solutions within Nairobi, Kisumu, Nakuru, and other parts of Kenya. We're also distributing within the local market in Uganda, but with, of course, the production of biostoves, we hope we shall also improve our distribution network within Uganda to develop the culture of clean cooking using ethanol made from cassava that is locally produced here. And we hope that is going to support sustainable development goals, specifically SDG 13, 7, and 3, since our effort is to reduce the use of charcoal that has seen a lot of forests cut down, that has seen a lot of Mother Nature being lost, and most importantly, carbon emissions that are being emitted into the sky, causing a lot of green energy issues here and there. So we hope with as we scale up further with support from government, specifically Uganda Development Corporation, we shall be in position to achieve these objectives, develop that culture of clean cooking, and have people consume more of that food. And within our community, we have really had a lot of impact, created a lot of jobs for the local farmers, about 9,000 farmers under the Archdiocese of Gulu Catholic Church. And of course, the local people within Nyoya, within Gulu, and the surrounding areas have gotten employment. We're employing close to 200 people on a daily basis as temporary and permanent staff. And that has really had a lot of impact. And we are hopeful that as we scale up this production process within the local industry, energy, specifically the energy sector, we shall change lives and we shall improve how we consume, how we cook, how we ensure we are consuming our environment through effective, clean, and healthy cooking solutions.
Smart 24, driving business.
Welcome back, ladies and gentlemen, and this is Financial Markets. My name is Anthony. I'm with
Victor.
Thank you for once again remaining with us. We are still driving you through the financial markets analysis, daily analysis here on Smart 24 TV. And the show is proudly brought to you by Altex East Africa. Altex is your number one brand when it comes to investment in fixed income securities. It is indeed a very turbulent time for different other financial markets, but it has never been for fixed incomes. They are fixed incomes because your return is fixed and your investment is set for as long as you're holding it. And with Altex East Africa, we're giving you market access, we're giving you affordability and convenience. By simply dialing *292#, you can be able to buy or sell a treasury bond in East Africa, that is in Kenya, Uganda, and Tanzania, across the different networks. Altex East Africa is regulated and licensed by the Capital Markets Authority of Uganda. And they give you the number one initiative that is called Zabu, by building your wealth using fixed income securities. The markets at Altex open at 8 a.m. and close at 3 p.m. East African Standard Time. Altex East Africa, doing something new. Well, Victor, let's have a look at Nairobi Securities Exchange. Nairobi is the busiest and biggest market in East Africa, and the oldest as well, dating way back in 1964. And we are currently going to give you what has been happening in the Nairobi Securities Exchange. Victor.
So, well, for Nairobi Securities Exchange, in terms of numbers, as of 19th, it ended the day with a total of 13,465 shares in 675 deals. So this is corresponding to a market value of 228,533,000. 137, and compared with the previous trading day, it's giving us a 16% decline in volume and a 14% decline in turnover, as well as a 27% decline in deals. So the current market capitalization of the Nairobi Securities Exchange is left at 1.46 trillion Kenyan shillings. So in aggregate, we're looking at 41 listed equities participating in the trading session, and we're looking at 19 gainers and 11 losers. We're seeing ABSA, a new gold ETF, leading the gainers with 12.25%. That is share price appreciation, and closing at 2,840 Kenyan shillings. And it was followed by Nairobi Business Venture with a 10% increase. We're looking at Uchumi Supermarket with a 4.76% appreciation, and leaving it at an end of day price depreciation of 3.87%. We're also looking at everyday East Africa. It's showing a 4.39 price appreciation. But on the losing side, we're looking at Sasini Tea and Coffee coming out last with a 2.56% depreciation. We're looking at East African Breweries showing a 2.04%, and Trans Century with 1.92% depreciation. And Safaricom, we're also looking at Absa Bank Kenya, as well as Umeme. But today we are shining light on the Cooperative Bank of Kenya to see how things went for it as of the last trading session. Anthony.
Well, Cooperative Bank of Kenya topped the East African retail banks' dividend stocks. When you look at most investors in East Africa, they really are dividend centered, and one of the things that drives investment in the different stock markets here in East Africa is how their dividend policies are stated. Kenya's Cooperative Bank of Kenya topped East Africa's retail banks as the best dividend stock, signaling the lender's increasing attractiveness on the market to investors that are keen on cash dividend payouts. According to analysis from African Financials, it shows that the lender, which is listed on Nairobi Securities Exchange, has posted a dividend yield of 12.7% on their stock, the highest in the region's top retail banks in the past 6 months to June 2023. Cooperative Bank of Kenya is followed closely by Equity Bank with an 11.3% dividend yield, and Kenya Commercial Bank with a 9.6% dividend yield, and then the NCBA Bank at 11.2% dividend yield, and Diamond Trust Bank at a 10.4% dividend yield. Dividend stocks, for our viewers who might not know, are shares of companies that pay investors a portion of the company's earnings on a regular basis. According to experts at the global financial advisory firm Forbes, the investors tend to view consistent dividend issuance as a sign of a company's strength and as an indicator that the management team of the company has positive expectations around the future earnings growth. This in turn makes a company more attractive to investors, which in turn helps to drive up its share price. And that is a big factor, Victor, for very many investors here. Paying a dividend allows a company also to share in its profits with shareholders, representing a gesture of gratitude for ongoing support, but it is primarily an incentive for shareholders to continue holding their shares and to tempt prospective buyers of its shares. A dividend yield, for our viewers still who may not know, can be calculated. You simply need to know what the dividend is and then what the current share price of the company is. So a dividend yield is the ratio of that shows how a company pays out a dividend in relation to its share price, and it is calculated by dividing the total annual dividend per share by the total market price per share. Just to put things into perspective, if for example a stock is at 100 shillings and they are issuing a dividend of 15 shillings, so you get 15 divided by 100, right? And that is what 0.15%. All right, that is when you multiply by 100, that is 15%, right? So that is exactly how you calculate dividend yield. And what we're discussing here is the fact that Cooperative Bank of Kenya is the top dividend stock in East Africa.
Well, thank you so much for those insights, Anthony. But in terms of numbers, we're looking at the current share price of the Cooperative Bank of Kenya standing at 11.60, and that is where it closed off its last trading day, which is as of Thursday, October 19th. But the cooperative began the year with a share price of 12.30 Kenyan shillings, and since lost 5.69% of that price valuation. So this is ranking it the 36th on the Nairobi Securities Exchange in terms of year-to-date performance. But the Cooperative Bank of Kenya is the 5th most traded stock in Nairobi, and that is of over the past 3 months. We're talking July 24th to October 19th, and it has traded a total volume of 34.3 million shares in 4,978 deals, valued up to 403 million Kenyan shillings over the period. So we're looking at an average of 543,800 traded shares per session, and of course a volume high of 10.1 million was achieved on October 3rd, and a low of 46,500 on August 31st for the same period.
Yeah, well, still looking at Cooperative Bank of Kenya, when we look at the financials of last year, by December 2022, Kenya's Cooperative Bank had increased its dividend payout to shareholders by 50% after its net earnings for the year ended 31st December 2022 surged by more than 30%, and that is reflecting the highest payment in 15 years. Now, the lender's profit after tax grew by 33% to 22 billion Kenyan shillings, approximately 169 million US dollars from 16.5 billion Kenyan shillings, or approximately 127 million US dollars in 2021, buoyed by an increase in both the interest and non-interest income, a turnaround of its subsidiaries in South Sudan. As a result, the board of directors proposed a dividend which was later approved of 1.5 Kenyan shillings per share, or 0.012 US dollars per share, from the previous year's 1 Kenyan shillings per share. This is exactly what we are talking about when we talk about an increase in the dividend yield. Subject to both regulatory and shareholders' approval, the dividend was actually approved later on in the year. The latest dividend payout translates to a total of 8.8 billion this year. That is how much they have issued out in dividends, and the highest dividend that has been recorded on the Nairobi Securities Exchange since 2008.
Well, thank you so much, Anthony, for those insights. But as we focused on the telecommunication side for Uganda, it is still worth noting that we need to take an eye through telecommunications in the Nairobi Securities Exchange as well. And particularly, we are seeing Safaricom recording the highest volume of 6.36 million traded shares. So looking at how Safaricom's performance has been doing for the previous months, they have been decreasing, and they haven't been on the brighter side for quite a while. But as we speak, Safaricom's share price stands at 13.80 Kenyan shillings, and that is where it closed off its last trading day. But as Safaricom began the year, it started there with a share price of 24.15 Kenyan shillings, and has since lost 42.9% of that price valuation, which is quite a big percentage. And this is ranking it the 58th on the Nairobi Securities Exchange in terms of year-to-date performance. So shareholders' worries are compounded by the fact that Safaricom has lost 8% of the stock's value from September 20th to date. But Safaricom is also one of the most traded stocks in Nairobi, and over the past 3 months, Safaricom has traded a volume of 536 million shares in 12,774 deals, valued at 8.4 billion Kenyan shillings over the period, and an average of 8.5 million traded shares per session, and a volume high of 208 million was achieved on July 28th, and a low of 299,700 on September 26th for the same period.
Well, Safaricom, on the other hand, started disbursing over 24.84 billion Kenyan shillings final dividend to its shareholders 2 days earlier, before, of course, unleashing their statements in the annual general meeting, helping to boost liquidity in the economy. Shareholders of the giant telecom received their final payout on Tuesday, and that was just in the month of August, around the month of August, in the 30th, that is 31st actually, to be very specific. That is when the shareholders received this final dividend at a rate of 6.2 Kenyan shillings per share, which was a drop. And this is exactly why we are seeing Safaricom going down. There's been a lot of high expectations from the stock. As compared to the previous year, they issued at least at a rate, a drop of 17.33%, comparing with the previous year, where they were issuing 0.75 Kenyan shillings per unit share last year to 0.62 Kenyan shillings per share this year. The reduced final dividend payout, compared with the aggregate of 30.04 billion a year earlier, follows a 22.2% decline in the net profit as well for the full year ended March 2023. The firm's profit fell as well to 52.48 billion Kenyan shillings from 67.49 billion Kenyan shillings in the prior year for the third year in a row, largely on the back of heavy capital investments in Ethiopia. Safaricom established a new firm or subsidiary in Ethiopia, and that beat a lot on its capital, and that is exactly why we are seeing these declines. The National Treasury will be one of the biggest beneficiaries of the dividend windfall for its 35% stake in the region's most profitable company. As the Treasury gross dividend pay was this year, the Treasury of Kenya estimated to 8.69 billion Kenyan shillings for its 14.02 billion shares within the firm, a drop of about 10.52 billion that was experienced a year ago.
Well, ladies and gentlemen, that is some brief insight from Safaricom, and it is noteworthy that there is indeed an explanation for Safaricom's recent performance.
Yeah, there's also something I forgot. When you look at Safaricom's recent performance, especially the decline in profit, there was a factor of elections last year. When Kenya was undergoing elections, there was a lot of slowdown in business operations, and the telecommunications industry was one of the worst hit. Also, there was an increase in excise duty in Kenya on SIM cards and mobile phones during the financial year ended March. This explains the dip in the profitability of the stock.
Well, as I was saying, Safaricom is listed on the Nairobi Securities Exchange and has been so since June 9th, 2008. So Safaricom is traded on the NSE under the symbol of SCOM and the International Securities Identification Number of KE1000001402. Safaricom is currently the most valuable stock on the exchange, and it is boasting a market capitalization of 553 billion Kenyan shillings, which is about 37.8% of the entire Nairobi Securities Exchange equity market. So just in case you are still interested in knowing how Safaricom works out or investing into their stocks, that is the information you need to know.
Well, still furthermore in Kenya, we still had companies like Cooperative Bank of Kenya coming as big movers with a 5.08 million, and as we've explained, due to the very good dividend policy of the company, having a dividend yield of over close to 12.37%, that is exactly why investors are more attracted these days to Cooperative Bank of Kenya, as the market is majorly driven by dividend payouts. Absa Bank Kenya as well had a 464,000 volume, whereas Umeme as well had 380,400 shares. But allow me to visit this particular product, the Absa New Gold Exchange Traded Fund, or ETF. Now, this is exactly what I'm talking about, the other markets, what makes other markets beat the Ugandan market, diversification. We have the Barclays New Gold ETF that is cross-listed from South Africa. And this is a $1.4 billion new gold exchange-traded fund that has been cross-listed from Johannesburg since 2004, and is also in the other five big African markets. Absa New Gold ETF is listed on the Nairobi Securities Exchange, and currently it is the 47th most valuable stock on the NSE, with a market capitalization of 710 million Kenyan shillings, which is about 0.049% of the entire equity market in NSE. Well,
Well, before we forget, regarding the performance of the particular market indices playing out in the Nairobi Securities Exchange, first and foremost, we want to see the all share index, and it paired at a 0.07, giving us a depreciation of 0.08%, and the points to close at 93.17, and this represented a 1-week loss of 0.56%, a 4-week loss of 4.12%, and an overall year-to-date loss of 26.91%. Other remarkable indices that performed were the 10-share index that saw a depreciation of 0.23% and an appreciation of 3.8% 1 week, and we're looking at a 4.28% depreciation year to date. And we're looking at the 20-share index that also saw an appreciation of 0.18% and a depreciation of 0.41% 1 week, as well as an 11.1% depreciation year to date. And we're seeing that the 25-share index as well reporting a 0.07% depreciation and 0.06% depreciation 1 week, as well as a 21.48% depreciation year to date.
Yeah, absolutely. The indices, like we have mentioned earlier on, are a market's average performance indication of the different stocks. They give you just a summary of what is going on really in the market, and Nairobi really does justice by giving us the NSE 10, the NSE 25, and the NSE 20, tracking those number of stocks in terms of the different market capitalizations, rankings on the Nairobi Securities Exchange. Away from the figures, Victor, I would advise our investors or our viewers here on the Financial Market Show to try out different markets. We know diversification is very key to alleviating risk in investment in financial markets, but always look out for not only product diversification but also the region diversification. The more you spread out in different regions, anything could happen in West Africa today, for example. There could be coups, and that affects how the financial markets are going to be performing, right? But if you have some investments in South Africa, if you have some investments in the global stocks, that is Amazon, Tesla, you're really safe. This is exactly, you don't have to travel there, you don't have to know people there, you just need to make the move, right, Victor?
Indeed. My insight, my view on offshore investments and product-wise, as well as it is a rather a good move to invest in offshore stocks, it is also kind of hectic, because stocks like those are not, they're not the kind of stocks you get in with a minimum sum. We're looking at most people are entering these stocks with lump sums, because you're looking at a stock that is sold at $400 US and above just for a single stock. You're not going to buy one or two, because with that you can't feel the real effect of the market movements and how other factors affecting the supply chains are affecting the market with only two stocks. So you need to carry a lump sum, and that is what people do not have.
Yeah. I would also advise in that line, if you can't afford the big stocks, then you look for options. The products that are offered on the markets in the global stocks for offshore investments are also diversified. We have futures and contracts. These futures and contracts give us affordable investments, because here you're not buying a stock, but you're buying a movement on the stock. You buy and bet, actually, it's sort of a betting, so to say, that Tesla stock will increase by $100 by the end of the year. And if it does, you have your money, you cash out, right? So also try to look out for some of those products. Like he has mentioned, the big challenge here is the huge sums that you have to invest. So to go around that, go into other products, try to learn more, try to ask investors who are experienced in international trade or in offshore investment in financial markets. They will be able to guide you, and that includes your financial advisor at your bank, the corporate and investment banker at your bank. All those guys are out there to actually help you get to know what to do on these other corporate investments. We're going to take a very quick breather, Victor, and when we do return, we will be looking at the rest of the world in terms of trade, what's happening in the commodities, what's happening in Bitcoin and other cryptocurrencies, and a lot more. Stay with us. We will be right back.
Smart 24, driving business.
Farming practices are evolving in incorporating new technologies to address the challenges of agriculture, especially in arid regions like United Arab Emirates, UAE. UAE's commitment to modern farming techniques is essential for ensuring food security and sustainability. The UAE has embraced modern farming practices, which likely includes hydroponics, aeroponics, and other advanced technologies to grow crops efficiently in desert environments. The adaptation of modern farming in desert areas is crucial for countries like UAE, where traditional agriculture may not be feasible due to limited water resources and harsh environmental conditions. Mentioning the world's largest vertical soleless facility in Bostania showcases the innovative approach to agriculture. Vertical farming allows for maximization space and resource efficiency, producing an average of 3,000 leafy greens daily in a significant accomplishment. This efficient production can help meet local demand for fresh produce and reduce the need for imports. Saving 95% less water is a remarkable achievement. In water-scarce regions, conserving water resources is crucial for sustainable farming. The absence of pesticides highlights the commitment to environmentally friendly and sustainable farming practices. The UAE's investment in modern and sustainable agriculture is not only beneficial for the country's food security, but also serves as an example for other regions facing similar challenges. This technology-driven approach to farming can potentially be a solution to global food production issues, especially in areas affected by climate change and water scarcity. Bostanica translates to your garden in Arabic, reflecting the farmer's mission to provide fresh and locally grown produce in the urban setting. Bostanica holds a distinction of being the world's largest vertical farm, covering a vast area of 330,000 square feet. It is a significant investment in modern agriculture. The facility represents a substantial investment of approximately $40 million. This substantial financial commitment highlights the importance of vertical farming in the future of sustainable agriculture.
Bostanica, we are a soilless facility that produces 3,000 kg, 3 tons daily of leafy greens. We are the world's largest vertical farm. Zero herbicides, zero pesticides and all. And we use, again, 95% less than water than traditional agriculture. So whereas in 1 kg of leafy greens in conventional farming, you would use 317 liters of water. At Bostanica, the same 1 kg of leafy greens would be consuming only 15 to 17 liters of water, which is 95% less. And we're proud of this.
Bostanica boasts an impressive annual output of 1 million kilograms, that is 10,000 metric tons of fresh produce per year. On a daily basis, it produces 3 metric tons of produce. This level of the production can help meet the growing demand for locally sourced and sustainable food. The farm employs efficient growing techniques, with a journey from seed to plantlet taking just in 2 weeks. This indicates an advanced technology and precision agriculture methods used in this facility. Bostanica cultivates a wide variety of crops, including beet, parsley, lilac, Moni romani, ruby sky spinach, kale, arugula, microgreens, mixed herbs, and strawberries. This diversity allows for well-rounded selection of fresh produce for consumers. Overall, Botanica serves as an exemplar of the potential of vertical farming to revolutionize agriculture for producing large quantities of high-quality, locally grown food in urban areas, reducing the environment impacts associated with traditional farming methods, and addressing the growing demand for sustainable and fresh produce.
Ndeka wena mulamu.
Wena kambona ku.
Otyo. Mbakemye lubona. Mubaire muri kola ki?
Ndide kulagira ono ngeri gye bagwayo kumbaga ya mwene ngwakozesa mu mope.
Eisimu eriwa gye buliko.
Tola yesimu wena nakobya ironi geisimu tobulira.
Eisimu yindi.
Niga sita ndala mukaga 5 sita 3 otewe ashi onige yesi. Balese chawo.
Balese merchant code gye balisaba. Mama kadi bati.
Kayo buzono wachi tamu nsanvu 3
balisaba.
Tamu sente dewe.
Amount. Baleta mobile money.
Mobile money.
Balikunsa bapini.
Ebucha utampiniyo.
Iwa imwe basasula.
Aye baba embaga ya mwene mwekuwoniza.
Pay or shop with MTN Momo and get cashback every week. It's free of charge. Use the Momo app or dial *165*3#.
Say goodbye to paperwork and travel costs. Now every MTN customer can register to invest in securities anytime and anywhere with Zabu in a few simple steps. Step 1. Dial *292#. Step 2. Select option 1. Register with Zabu. Step 3. Enter your full names. Step 4. Enter your national identification number. Step 5. Enter your national identification card number. In 24 hours, you will receive an SMS confirming your registration. Congratulations, you are now ready to invest.
Smart 24, driving business.
Back from that short commercial break. I'm Gloria together with Victor, and this is the Financial Market Show. We are going to proceed with our updates from Johannesburg and see how the market went down on our last trading day. What do you have for us, Victor?
Well, as far as the rest of Africa is concerned, going straight into the updates from the southern parts of Africa, Johannesburg specifically, we're looking at the trading summary as of October 20th, 2023, which was quite an eventful day actually, and we're looking at totals of 243,695,971 shares being exchanged in 340,381 deals, and that's a substantial increase in volume, and it was up by 24% compared to the previous trading day, and this is leaving us at a market value of 15,354,389,759.44 rands, which also reflects a 16% improvement in turnover as well.
Well, Victor, the market certainly has a lot of activity going on, and the Johannesburg Stock Exchange is often seen as a barometer in South Africa's economy, and so these numbers actually might be quite significant.
Indeed, they are, and now when we look at the individual equities that participated, we had 314 listed companies involved, and it is also worth noting that 88 of them ended the day on a positive note with the share price gains. So the leading gainer was Ellie's Holdings with an impressive 16.67% share price appreciation, closing at 0.07 rands per share.
And that's quite a substantial gain, Victor.
Indeed,
And
indeed.
Following Ellie's holdings, we also saw Tiger Brands with around 11.19% share price increase. Coming up next was Europa Metals with 10% share price gain, and we also have Afrocentric Corporation with around 0.8% rise. So it's actually interesting to see a strong performance from these companies.
Indeed, we're seeing actually an 8.9% rise from Afrocentric INV Corp. And looking on the flip side, we can't ignore that companies actually saw price depreciation. And going straight onto that side, we're looking at African Dawn Capital that had a pretty tough day with a significant end-of-day loss of 33.33%, closing at 0.06 rands per share.
Ouch, that's quite a sharp decline, Victor. And following, we have Africa Dawn Capital that also saw a huge decline. Then we also have a huge group coming up next with 24.54% decrease. We also have Trust Corporation Holdings with a 20% drop, and Labat Africa with 11.11% loss. So these numbers certainly show that not all stocks actually had a great day.
Indeed. And when it comes to trading volume, we are looking at SA Corp Real Estate that took the lead with 18.2 million shares traded. We're looking at Growth Point Properties, followed closely with 16.5 million shares. Then Redefine Properties with 13.8 million, and Sibanye Stillwater with 11.4 million. These numbers give us an idea of where the market's focus was as of yesterday.
Absolutely, Victor. And moving on to the JSE market indices, we have the JSE All Share Index, the J203, that had a bit of a rough day. It declined actually at around 763.32 points, representing a 1.08% drop, closing at around 70,000 points. So this translates to around a 1 week loss of around 3.73%, a 4 week loss of 4.15%, and an overall year-to-date loss of 3.9%.
Yes, and the FTSE Johannesburg Stock Exchange All Share Index is often considered a benchmark for the South African market, and these numbers do show turbulence. But it's also important to look at other indices. The FTSE Johannesburg Securities Exchange Fledging Index had a small of 0.01% gain, and although it was down by 10.01% year to date, and the FTSE JSE Mid Cap Index was down by 0.65%, and of course representing a 4.12% loss for the week and an 8.26% loss for the year.
And coming up with other notable indices, we have the FTSE, or you could call it the JSE Top 40 Index, that also went down with 1.1% for the day, reflecting a 3.8% loss for the week and a 3.52% loss for the year. We also have the Large Cap Index that went down with 1.21% with a 3.71% week loss and a 2.97% loss of when it comes to year-to-date terms. And finally, we also have the Small Cap Index that had a 1.36% drop with a 2.26% loss for the week and a 4.05% loss for the year.
So it is safe to say that the broader market had a bit of a challenge, and these numbers reflect a broader trend over the past few weeks and as well, and also throughout the year.
Interesting, Victor. So moving on to some information coming in when it comes to Bitcoin. What do you have for us there?
Bitcoin is one of there's so many things going on within the world of cryptocurrency at large, and we're looking at so many technological advancements, and it is worth diving into. But over the weekend, Bitcoin made quite a resurgence, climbing back over the 30,000 US dollar mark.
That's right, Victor. And this bounce actually comes from the heels of a Wall Street sell-off. So it's incredible to see how interconnected these markets actually are, and it's certainly bringing up interest within the cryptocurrencies.
Absolutely, but it's not just Bitcoin. Chainlink has been performing exceptionally well too, and thanks to the recent tech stack upgrade, this new CCIP upgrade simplifies cross-chain transactions and has propelled Chainlink forward.
And you know, it's also essential to look out for the bigger picture here. The overall crypto market cap now stands at around $1.2 trillion, which is actually 2% increase from the previous day.
Well, I'm not looking at the other interesting points on Bitcoin. The prominent trader Pentoshi pointed out that 28.9 thousand US dollars is a key defensive area for Bitcoin bulls, and he believes it's actually pivotal for maintaining that bullish momentum.
That's actually a good point, Victor.
It really is.
Of, the swing trader Roman Trading that actually mentioned about a potential bearish and head and shoulders pattern. So what could that spell for Bitcoin?
Well, Roman Trading indeed actually suggested a bearing pattern, but the Titan of crypto takes a more optimistic view, and they believe Bitcoin still has a lot of potential despite these patterns.
Exactly, and the differing opinions in this space always make it more fascinating. Now let's switch our focus to Chainlink. This recent surge is actually exciting, isn't it, Victor?
Absolutely. Actually, Chainlink's rise can be attributed to its CCIP tech stack upgrade, making cross-chain transactions simpler and more efficient. So ANZ's Lee Ross highlighted the significance of Chainlink's cross-chain capabilities. So it shows how technological advancements in crypto space can genuinely make a difference.
And speaking of making a difference, the trading group Stock Money Lizards is predicting a new Bitcoin bull market based on the previous halving patterns. They see another surge in the horizon, possibly next year.
Actually, that's quite a prediction. But let's not forget, it is essential to remember that this market is influenced by various factors. Sentiment around the potential approval of spot Bitcoin ETFs in the US and also gaining traction. But JP Morgan predicts multiple approvals for these ETFs, and BlackRock CEO even hinted at a possible flight to equality for Bitcoin.
Indeed, Victor. And the world is buzzing with excitement and anticipation. It's not just traders and analysts. Even well-known Bitcoin advance Michelle Saylor from MicroStrategy is sharing an encouraging chat supporting his positivity in this thing.
It's actually great to see influential figures backing the cryptocurrency market. Now, let's not forget about the broader crypto market, and the top 10 tokens are showing diverse performances. It's a dynamic landscape, and actually these tokens are being influenced by the market sentiment shift by analysts as well as traders. And
as you know, Victor, it's also essential to look at the bigger pictures and the overall crypto market cap that now stands at $1.2 trillion, like you said, which is a 2% increase from yesterday. So how do you think our traders actually reacting to these developments?
Well, it's actually a broad aspect, and that question has different ways it actually could be answered. It's actually regarding to the investors or analysts' goals, really. But this bounce comes on the heels of a Wall Street sell-off, and it's actually incredible how interconnected these markets are, and it's certainly reigniting interest in cryptocurrencies.
Interesting, Victor. So coming off from our stories concerning the tech giants in the industry, what could you have for us?
Well, concerning tech giants, diving right into it, we're putting our focus on upcoming earning reports from tech giants. And this week, all our eyes are on big tech. We're talking Microsoft, Alphabet, Meta, and Amazon slated to report their earnings. But these reports can significantly impact the market as they often set tone for investor sentiment.
Interesting. And these tech giants have actually been pivotal in the marketing performance. So it's not just about the earnings this week, it's about other factors at play.
Absolutely. Actually, on the economic front, we are expecting the first estimate of the third quarter GDP, which is anticipated to show the US economy grew at an annualized rate of 4.3%. So that's a significant figure, and it can give us really valuable insights into the broader economic health.
And on Friday, we'll be keeping an eye out close on Federal's actually prefer inflation gauge. So it's always a critical metric when it comes to Bitcoin, especially in the current economic development.
Well, these big tech earnings come at a crucial time for the markets, and we've seen 16-year highs in treasury yields and uncertainty about when the Fed will reach the peak of its interest rate hike cycle. So there's a lot going on.
Exactly, and it's also important to mention that last week was a bit of a roller coaster when it comes to the crypto world. We have the Nasdaq that fell over 3%, and the S&P 500 and the Dow Jones also saw significant drops.
That's right. Actually, these recent market movements have been influenced by various factors, and one of them is rising interest rates. But let's not forget the Federal Reserve. The Federal Reserve enters its blackout period this week ahead of its next meeting.
That's actually a significant point, Victor, and the markets are currently pricing in high profitability that led the Fed won't hike interest rates in the upcoming meetings.
And Fed Chair Jeremy Powell, in a recent speech at the Economic Club of New York, emphasized the ongoing challenges of inflation and the resilience of the economy. So it is worth noting that he left the door open for future rate hikes.
So while the November hike rate might be unlikely, the December remains quite a possibility. So the recent string of positive economic data keeps the Fed on high inflation alert.
And as we move into the week, we'll be closely watching the economic growth and inflation data. And Thursday's GDP release is expected to be a really significant indicator of economic growth in 2023.
Exactly. And on Friday this week, we'll actually be looking at the core, the PCE, which is the Fed's preferred inflation measure. It's actually expected to show a slight drop in September.
Well, just for a few questions on our particular spotlight of the rest of Africa and the world at large. Just for continuing a short in-depth discussion for the recent Johannesburg Securities Exchange trading summary as of 20th, like the market there's a lot of action clearly on the market. But Gloria, what are some factors that might have influenced these significant price movements and the overall decline in the indices for a big dog on the continent like Johannesburg?
Well, that's quite a great question, Victor. The market movements actually influenced by multiple factors, and South Africa is no exception. One significant factor is the investors' minds, which is the state of the global economy. So concerns about inflation, supply chain disruptions, and central bank policies have been weighing heavily on markets worldwide.
Indeed.
So these concerns tend to swipe across, cause fluctuations, and this could be one of the leading concerns.
Indeed. But just for more insights on Bitcoin as well, just to look at all the news we have received and the overall crypto market cap standing at $1.2 trillion, and of course this is showing us a 2% increase. What do you think of the market now that we're seeing all these technological advancements?
Actually, it's also interesting to see the prominent trader Pentoish that pointed out around 28.9k in a key defensive area.
Indeed.
So what I think about these markets right now, I think the Wall Street sell-off is thought thought to be particularly due to concerns about the rising inflation and how it may actually affect these interest rates. So while as traditional markets take a dip, it often leads to increased interest in alternative markets like the cryptocurrencies.
Indeed, and actually that is exactly what caused the Wall Street sell-off. Indeed. But thank you for joining us for the rest of Africa and the world at large in particular. Gloria, any more insights on financial markets on the globe?
Well, we could dive into the world of cryptocurrencies, Victor, where we have a fresh update over the weekend concerning Bitcoin and Ethereum, where they had some moves. Actually, the BTCUSDT increased by around 1.53%, which is the Bitcoin, and the Ethereum coin rose by around 0.88%, which is quite interesting.
It really is, and cryptocurrencies have been keeping us on our toes lately. But judging from our previous stories on the technological advancements and what exactly is going on with Bitcoin, it's actually good to see some positive movements, but there is more to talk about, of course. And one of the major stories in the crypto space right now is about the Ripple versus the SEC case. And Gloria, what exactly could you tell us in brief about that particular situation?
Well, as of last week, actually, lawyers representing the U.S. Securities and Exchange Commission revealed their intention to dismiss all claims against the Ripple executives. So the CEO, Brad, and executive chair, Chris Larsen, this was seen by Ripple's chief legal officer and Stuart Alteri as a surrender to buy the SEC.
Well, so in your perspective, why did the SEC decide to dismiss these claims against Ripple's executives?
An excellent question, Victor. Well, in my perspective, the reason behind the dismissal wasn't explicitly mentioned in the report. But however, this could be part of the SEC strategy, and it might indicate that focusing on their efforts and other aspects of the case.
Well, for all intents and purposes, says pro-XRP lawyer Jeremy Hogan, and the Ripple versus SES case is actually over, and he expects a final judgment in 2024, but also points out that a settlement or appeal from either party remains a possibility.
So what could be the implications of this case in the crypto industry as a whole?
Well, the Ripple versus the SEC case has been closely watched because it could set a significant legal precedent for the crypto industry, and the outcome could influence how regulations treat digital currencies and other companies involved with them.
It's actually also interesting to note out that Jeremy Hogan assigned quite specific points to various possible outcomes. He believes that if the SEC appeals, they theoretically have around 14.2% chance of winning.
But why are these odds so specific? How can someone predict these percentages?
Predicting these percentages can be quite challenging, Victor.
Indeed,
so,
indeed.
When it comes to our lawyers out there, it's likely like offering his best estimate based on the legal expertise and the facts presented in the case. So it's more of an informed opinion.
It really is.
A graduated outcome.
Yes, and moving on, the United States Securities and Exchange Commission filed a default judgment against Samir Ramani, one of the individuals involved in Coinbase's insider trading scandal.
Could you explain more about what happened in this Coinbase insider?
Well, certainly. Actually, the SEC accused Ishan Wahi, a former manager at Coinbase, of tipping off his brother and a friend about Coinbase's listing announcements. And these tips allegedly allowed them to make substantial illicit profits totaling at least $1.1 million.
Interesting, Victor, and I think we should keep an eye out for these ones and come up with more updates on what's going to come out of these cases.
Certainly.
Exactly. So this was me, Nampijo Gloria Christine, together with
Victor Chiberu,
and we'll be back with more updates concerning the financial world. Thank you for watching. Thank you for tuning in to Smart 24 TV.
Smart 20.